Give us a little of your backstory. How did you end up doing what you do today?
So I grew up in the UK. I went to college in the US and ended up in investment banking. If anyone out there is sort of in their mid-20s and struggling to figure out what they want to do or feel like they're stuck in their career, I do recommend that book. The biggest piece of advice I would have is just remember that nothing ever lasts forever.
Stakeholder theory, and you have your shareholder theory, and most of the time the investors are going after the shareholder theory, how to maximize the profits for the shareholder.
Ask yourself, you said I need this money to grow. With your first dollars into the company, start investing there on that long-term financial viability.
Welcome back to Growth Under Pressure. I'm your host, Eric Josovitz. Today I'm joined by Alex Johnston, Global Head of Operations and VP of Finance and Operations at Glorify, a Christian devotional and worship app. Alex, thanks for joining.
Thank you, Eric. Thank you for having me.
You're welcome. Give us a little of your backstory. How did you end up doing what you do today?
Sure. So I grew up in the UK. I went to college in the US and ended up in investment banking. Funny, I think two of those decisions weren't really my own. I was kind of a late bloomer in the sense thinking about my future and my career. It took me a while to, I think on my own 2 feet. But my dad and my older brother were both in investment banking. My brother at the time was already in private equity, having spent a couple of years in investment banking. And so that's what I saw at home. That's what I knew. That was kind of the pressure that was being put on me. So I spent 5-6 years in investment banking. That was spent in Madrid, Spain. And those were kind of, I would say, incredibly formative years. I describe banking as the best experience I would never want to do again. But it really forced me to think about what I really wanted to do and what would be fulfilling to me and what would make me happy. I did actually, I don't know this author, so it's not a plug, but I did read a book at the time, which I remember very well. It was called The Second Mountain. If anyone out there is sort of in their mid-20s and struggling to figure out what they want to do or feel like they're stuck in their career, I do recommend that book. I also saw a life coach at that time, and he encouraged me, and the book encouraged me to sort of stop what I was doing and really have a deep think about what it is that would make me happy. And so I started chatting to a couple people using my network, and I went out for a coffee with a friend of mine called Henry Costa, who spoke to me about Glorify and his vision for the app and for the company. I didn't grow up a practicing Christian, so first off, I thought it was an incredible commercial opportunity. I think that was kind of my banking hat on. It's like, wow, what an incredible addressable market, and the unit economics, et cetera, et cetera. Calm and Headspace were exploding at the time. Mental health and well-being was becoming more and more important to everyone and more accessible, right on your mobile phone. So it was immediately apparent to me that this was a huge commercial opportunity. I never expected for it to be so impactful on my day-to-day life, sort of outside of work as well. And coming from banking, it really spoke to me on a fulfillment level as well, because it was about having a positive impact on people's daily lives. And there were 3.2 billion Christians out there. So those two things also combined to make it just a massively compelling opportunity and next step for me.
Yeah, you go from investment banking, which is really profits first, to now impacting others, and it's people first. It's more humanity and changing those lives. But you started in investment banking in Madrid in Spain. I know you were working long hours. Did you at least get to enjoy the food and the country?
You're right in that it was difficult to do so. Now, I did study abroad in Madrid for a year. I did my junior year abroad there, and I can assure you that I did enjoy the culture plenty then. Um, Probably at the sacrificing a lot of my sort of schoolwork and classes. But then when I went to live there and work in banking, it was very much long hours. And ultimately, I'm not afraid of admitting that it after 5 years of that, I was pretty burnt out.
Yeah.
I was pretty burnt out. It was very, very long hours, very intense, um, just very tough. Yeah.
Do you have any regrets? I mean, most of the time we have executives on our, and CEOs and founders watching our podcast, but we'll also have young adults that are going into school and education and coming out of school to jump into investment banking or a big four accounting firm, those long hours, burning the midnight oil. Do you recommend still pushing hard in your early to mid 20s, or, looking back, do you think it would have been better for your livelihood to take something a bit more chill?
Yeah, it's a great question, and I know generally more and more it's a less common career path. I mean, I think it's still one of the most popular, but compared to what it was, I think you know I would say from pre-financial crisis of 2008, it has seen a steady decline. I mean, more and more people are going straight into tech, for example. Now, personally, given my position at the time, I said I was a late bloomer and I didn't really know exactly what I wanted to do. I also said I spent most of my junior year abroad just enjoying the culture. That's probably a reflection on my college career in general. So personally, it really was the best thing for me. And as I said, it was the best experience I never want to do again. It really teaches you hard work and focus, and actually the joy that comes from hard work. I never found much joy excelling at school, but thrust into that environment of sort of intensity and long hours and such high standards, it was the best thing for me at the time. And so I would recommend that, I would recommend it to people, certainly if they're in a similar position. Um, and perhaps most importantly, if you don't want to spend your whole career in banking, which I totally get, it will give you the most amazing foundation to go on and do whatever you want to do.
Right, because that's the springboard that
Yeah.
got you to glorify and ultimately starting off as the chief of staff and head of operations and all these different global head of operations, this very I was going to say glorified career. And what is the translation look like? Did you have a steep learning curve? I know you're looking at businesses all the time in investment banking,
Mm.
but from an operations people management side, was there a bit of a learning curve for you?
Um, Absolutely. I mean, you definitely don't. I mean, first of all, you're working with companies that are already somewhat established, right? Like I did a year at UBS where you're working with large corporates, like billion-dollar companies, right? I also did 5 years with Arcana where you're working with small to medium-sized enterprises, which is slightly more relevant. But nothing will prepare you for working in the day-to-day of a company and certainly scaling it from 0 to 1 to 100. Um,
Yeah.
that no career outside an operational role can prepare you for that. And I think the trials and tribulations, and especially as you say, the people management, because the people you work with are unbelievably talented, absolutely, but they might not have had the education that one of those more sort of established career paths can give you. Like the grounding of how to work with other people,
Yeah.
how to stay focused, and the high standards you should have on sort of an everyday basis. And then I think also, the hiring and firing, probably not the nicest way to put it, but it happens all the time, and it's, hiring people is the most important decision you're ever going to make, in an operational role when you're trying to run a company. And more times than you would like, firing is also an unfortunate, but very important piece. And you can't prepare for that outside an operational role.
You definitely can't prepare for it. Would you agree with the phrase hire slow, fire fast?
Yes,
Yeah.
I would. That advice was given to me a couple of years ago by one of our advisors, and it's true. Unfortunately, but the way I do like to think about it is, it's, I've been very unhappy during my career at certain points. Um, Most of the time, not at Glorify. Generally, I've been pretty happy here. But so I do like to think, like, if someone's not working out, in all likelihood, they're not happy either. And so having that tough conversation with them can be a massive blessing in disguise for them.
Yeah.
And it, go on.
No, I was just going to say I've also been in similar operations and finance roles in my career, and I've unfortunately had to let go of a lot of people and hires, hiring plenty. Um, it's always tough, but I always, to your point, I always feel like there's something better out there for them. It's not a good fit here. It may
Exactly.
be tough in the moment, but growth is always hard. So hindsight 2020, most of those people that you let go, they look back and they say, "Oh, you know what? That wasn't a good fit. I'm so glad I ended up in XYZ."
Exactly. 100%. And I think whenever we have had to do that, um, we do pride ourselves on being as sort of empathetic and supportive and helpful as possible, in terms of setting them up for their next position, using our network to do that, to make introductions for them. And whenever
That's great.
finances have allowed, giving them a bit of runway.
Yeah, that's excellent. Going back to your investment banking experience, were you pretty much just analyzing businesses? You're looking more at the numbers, the financial modeling, and assessing them to be a strong investment, and or managing that investment through a portfolio. Is that in super high level what you were doing?
I definitely more the former. I mean, and it depends on which position. So at UBS, it was a lot of um, preparing, you know, investor decks, maybe for a company to go public, for example, um, valuing companies, for an acquisition, for example. Sometimes you're on the sell side, so you're positioning a company, to be acquired,
Hmm.
and creating a competitive process around that. So, speaking to investors or would-be buyers, and positioning that company, your client, in the best way possible. And then, sometimes you're on the buy side and you are valuing the company. You're working with a buyer. You're valuing the target company. Creating a accurate valuation, so they're paying the right amount of money. Valuing the amount of synergies that company might be acquiring. Um, and then when I moved to Arcana, which was more working with small to medium enterprises, it was all of that and a lot of, almost consulting work, right? Because these companies are not necessarily as established or sophisticated as the large billion-dollar companies, and they don't have the large finance teams or strategy teams. And so you're, um, helping them with all of that. I don't want to say hand holding because that's probably doing them a disservice, but you're doing a lot of advisory work just in like the day to day. strategy and operations of the company more than that, just high level sort of valuing companies and positioning them for a sale or for an acquisition.
That's great. So really you're coming in, you're saying, hey, I would do things this way in order to, position yourself in the market in this light, or operationally, these are the things you could be doing differently.
Yeah.
That's great. Let's fast forward to today. What does life look like for you right now? I know professionally. What about personally, and how are you spending most of your time?
So I have a 20-month-old son, and a daughter on the way. She will,
Congrats.
Lord willing, be born in April. Thank you. We actually just got back from holiday, and so we've gone from my son spending every single waking hour with mum and dad, to mum and dad both at work and a new nanny, because the one who was with him for his whole life has transitioned out. So he's a real mess today, but it's all joy, obviously.
Yeah.
And in LA, been here for 5 years, loving it. We did start in the UK at Glorify, but it quickly became apparent that our investors were based on the West Coast. Our biggest addressable market was going to be in the US and Latin America. And I would say the best talent in tech is here on the West Coast as well. So
Yeah.
it was a clear move, and but still very happy here.
That's great. And are you in the office, out of the office? What does that day to day look like for you?
Yeah, we're a pretty much fully remote working company now. We give an allowance to employees if they want to spend a couple days in a remote work in a sort of shared working space, or to go work in a cafe, for example. So we give an allowance to employees for that, but we're mostly remote. We grew a lot during COVID, made most of our hires during COVID. So that obviously impacts, where your search criteria when you're hiring. Everybody was working remote then, and also, it's because we were sort of born and bred in remote working. We became really good at it, and we saw no reason to spend a big chunk of our money on a an office, for example, or limit ourselves to a talent pool that was local to the West Coast, for example.
That's great. It's funny. I started Adapt CFO, the outsourced accounting and strategic finance firm. I started in 2018, and we were fully remote. Well, it was me. I was fully remote on my couch. I actually had a bunch of situations happening. I went through an acquisition, tore my Achilles, and just had surgery. I literally just found out I was having my first baby. So I was on the couch with my laptop, my foot up, starting this company with, no end in sight. I didn't know if I was going to be able to pay rent. Luckily, my fiance, now wife, was working full time. So
Wow.
so I wasn't sure what that remote world was going to look like. In the first year or two, people would always push back. Oh, well, we really need someone in the office. And I would go into an office and it would be unproductive. For small businesses and fast growing companies, it's not necessarily needed. And it's the same thing as, I think you'll understand this, but an early stage company getting NetSuite, some big ERP system that's $10,000-$20,000 a year, when they can be on a basic QuickBooks. It's like there's not I don't think there's a one size fits all.
I totally agree. Yeah, and we made a lot of those mistakes as well. Paid for the flashy software, or you know we did have an office space for a while, and you learn the hard way.
Ramp up too fast with VC money.
Yeah, pretty much.
What can you share with me about the company? We talked a little bit about the company growth and optimizing margins, making the company not necessarily automated, but really just providing what's, the need to have, not the nice to have. And I think a lot of startups in the early days, they get VC money or investor money, and they go get a party bus, or they add all these things, which, you always think, oh, this is going to be great. But can you share some of the story of having all those nice to haves versus, optimizing the business for growth, and yeah, feel free to share what you can.
Yeah, I mean, I think the biggest piece of advice I would have is just remember that nothing ever lasts forever. And so, in my personal experience, we raised our Series B in November 2021. Money was virtually growing on trees. The tech industry was on fire. And we raised our Series B 3 months after closing our Series A, and
Wow.
10x our valuation, which was absurd. Um, and at the time, especially for, I think, a team that didn't necessarily have the battle scars of going through different economic cycles, um, we learned the hard way that nothing lasts forever, and the goalposts and the criteria that you are valued on also change. So at the time, it was all about user growth and active users and retention and engagement. And to be fair, yes, we did mark super highly on all of those things. However, we weren't profitable. We were far from it. Our sort of, paywall and monetization strategy were almost non-existent. We hadn't put much time, effort, or investment into them. And we hired a ton of people. We got an office. We got distracted instead of focusing on, I think, what matters and what will create long-term value that is resilient to economic cycles. And if I could go back, I absolutely would have said, let's. It's all right to invest in these areas of the business, but let's keep an eye on monetization and profitability. Let's not forget that.
Is is it cash flow that allows you to focus on economic value? Is cash flow one of the big pieces to it, other than profitability?
Yeah, I would say it's. I mean, to dive a little deeper, it's in our case, it's unit economics, right?
I
And
see.
so it's, what are you acquiring your users for? How long do they stick around, and what are they paying? That's the foundation of the business model, and that's what will determine long term how successful you are. Because it's not going to be user growth, for example. I think even if you look at ChatGPT right now, they're facing more and more scrutiny about their unit economics and their long-term sort of business model and profitability, despite, quite frankly, outstanding and unparalleled user growth.
Hmm.
So even for a company of ChatGPT's standing, or I should say OpenAI, um,
Yeah.
it doesn't matter whether you're OpenAI or Glorify. You, there'll come a day of reckoning where where you're gonna be marked and ranked on your unit economics and your sort of route to profitability over anything else.
Those unit economics, and being a subscription based company, are we talking CAC, LTV, payback period? Are those the main ones you're looking at?
Yeah, exactly.
Yeah, because I mean, it goes back to the leaky bucket theory, right? You're pouring a ton of money into marketing for growth, but you don't have you're not investing in keeping the customers, so they're just leaking out of the bucket, and you're spending a lot on marketing. So there's only so much that you can pour in without like you're gonna hit an inflection point
Yeah.
where it's like I've spent all this money. Yeah, we have some users. Well, it's time to monetize, and it actually reminds me of the Duolingo story. They continue to raise money, and they offered this free, a very similar mission to what you guys are doing, going out, affecting human beings, allowing humans to speak a different language, but offering a free option. Because if you think of it, there's a lot of third world countries that don't have the ability to pay for a subscription. So why not offer them the ability to, learn a language, read a daily devotional, but at the same time, there has to be a step up for monetization. It's not you guys didn't start a nonprofit, right?
Exactly. And there's a balance you can strike, right? I mean, like, for example, in our case, we do have a scholarship program, right? If you are in if you are in circumstances where for whatever reason you can't pay for the app, um, then we don't want to deny someone, uh, the opportunity to grow closer with God every day. So we do have a scholarship program, and we do sponsor some users, but the focus of the company, first and foremost, should be on, as you say, that leaky bucket, should be on the unit economics. And the other just word of warning I would give people, is, you know, your investors might also be giving you, might not be giving you this advice. What I mean is, like, when times are good, investors are going to be the first, to try and give you that money and ask you to spend it. And don't assume that they're the smartest people in the room, I think is what I'm trying to say. Think for yourself, put the company first, and think, past an investor's sort of time horizon on their investment. Long-term viability of the company is what you should always be focused on, because everything around you, context, economic cycle, investor interest, might change at the drop of a hat.
That's great advice. I mean, you have your stakeholder theory and you have your shareholder theory, and most of the time the investors are going after the shareholder theory, how to maximize the profits for the shareholder. But what you're saying is you should be thinking about the stakeholders, everyone that has a stake in the business.
Yeah, absolutely. And I think it's, especially for first-time founders or first-time operators, speaking to these investors can be very intoxicating, right?
Absolutely.
But stay focused on the mission, stay focused on the long-term goals of the company, and the long-term financial viability of the company.
That's great. Yeah, and every investor is different. There are some that are here's the money, you guys go do your thing, what you specialize in. And then I think what you guys run into is the Series B, which it's a lot more of the institutional money, which they want a board seat, and they come with handcuffs. Is that safe to say?
Um, I think handcuffs is a strong word. I mean, it depends on the situation, right? Like, if in our situation, um, yeah, every investor is different. I have had excellent experience with investors and very bad experience with investors. It all starts rosy, right? So no one's putting a handcuff on you at the beginning, for sure. To your point, I would say is no matter how intoxicating it is and how rosy it starts at the beginning, read the small print.
Yeah.
Always work with lawyers, which is an interesting one because, obviously with AI, I think that, we'll see how long that advice holds true for. But for the time being, always work with lawyers, read the small print, because you never know when that relationship is going to turn sour. And investors will, by hook or crook, with uh, no regard for the company, for the employees, and the long term vision of the company or the mission, will try to wrestle back control their money, make decisions for you. So be very careful. And to go back to your question, there are no handcuffs at the beginning. At the beginning, they're pitching you, so always be aware of that. You have you can say no. There's other money out there, so they are selling to you, and they will sell a rosy picture. And never forget that as soon as they have no loyalty to the long-term mission of the company unless you're very, very fortunate, which I will say we have been extremely fortunate with Andreessen Horowitz, in that sense. But
That's great.
but in general, it can turn so quickly.
Yeah. Well, you got one of the best out there.
Yeah.
It's and that's really good advice, because most startups, you're raising money and you're like, I'm gonna take your money. I'm like, I need this money to grow. Forget the fine print. Let's move on with it. But it's the same mentality that I have with forecasts, where okay, you can put a real grandiose forecast in front of an investor, but guess what? You're gonna be held accountable for that. You're gonna have to hit those numbers.
Yeah.
Right? So it's all about setting expectations in the beginning.
Yeah. And ask yourself, you said I need this money to grow. Absolutely, right? But you won't always be able to fundraise. So that's where I come back to that, with your first dollars into the company, start investing there on that long-term financial viability, because there will not always be external funding available. And as a company, you should be prepared for when that evaporates, for when that isn't an option.
It's funny because that's usually the last piece that startups and small business go towards. And of course, I'd be drinking my own juice to say that, finance, and I know we're going down the rabbit hole, so I appreciate you hanging with me, but finance and clean operations, like controls and SOPs, just smooth processes, are really important from the beginning. Are we saying the same thing, that you should really just lay down the financial foundation and controls from the beginning?
Yeah, definitely within reason, right? I think we mentioned earlier, spending on the software with all the bells and whistles, right? That might not be necessary at the beginning,
Yeah.
and we made that mistake. But certainly, build everything to scale, but always go with the never go for more than what you need. I think a lot of startups are probably paralyzed pretty quickly by decision making processes and maybe too many checks and balances, right? I mean, at the beginning, you're more often than not, you're an incredibly simple business. Um, so, so yeah, lay the foundation, but don't, no, there's no need to overdo it.
That's really good to build on. We always ask our guests to unpack a growth under pressure moment.
Mm.
If you can think of one or a couple times in business or in your career specifically, when you weren't sure how something would play out, it was a dark day, you weren't sure what tomorrow would look like. Tell me about that time and what happened and what did you learn from that experience?
Um, yeah, good question. I think first thing that pops into my head was when the CEO, my friend, left the business for a extended period of time through burnout. And it was pretty sudden. It was right when we were raising our Series B and closing that. And so it meant that from one day to the next, I had to step into that role. Um, and you can imagine how difficult that was. Not, I would say almost the easy part was actually stepping into the role and keeping the company ticking over and running the day-to-day operations, right? Because that, as head of ops at the time in such a small company, that's already what my job was. I was already acting sort of right hand to the CEO
Yeah.
and running day-to-day operations for him. But it was what the CEO has to take on, right? Which is sort of shareholder management and board management and partner management, right? So long-term strategic value creation. And you can imagine with the CEO stepping out, how difficult it was to step into that role, given the context of managing shareholder expectations, board expectations on where the company was going to go, when the CEO was going to come back, and what how the leadership would evolve at a time when we had just raised a huge amount of money at a huge valuation, and so the expectations on the company from one day to the next were sort of 10x. It was kind of even as I'm sort of telling it and kind of reliving it, it was an unbelievably stressful time and a total pressure cooker. CEO is also my friend, so that certainly added to it. And it was definitely the biggest growth moment in my life. And as I look back, there are plenty of things I would have done differently. Um, so many decisions I would have made or meetings I might have handled differently. But I do look back with enormous pride on what I achieved because I think, um, keeping the company on a steady keel and progressing it through that time, just that alone, I think was a massive achievement for me personally.
Did you lose any investments or any deals or lose employees or anything? I know you were the face. People, you had to go from, being right hand to now being the face of the company. Kind of like a fake it till you make it
Mm.
moment. Like, look, I'm here. He's fine. Don't worry about that. Was there any real bad or negative things that happened during that time?
Yeah, I mean, there were a couple shareholders that were very unhappy. Um, that despite talking them through the situation, they couldn't come to terms with it. Uh, I I would I would say that 99% handled it extremely well with empathy, right? Because this, at the end of the day, is a human being we're talking about who is
Yeah.
suffering from acute burnout from working so hard at the company, right? And trying
Yeah.
to create value for the company and its shareholders. That's the reason. It wasn't that he had burnout because he was, working hard on a side hustle or something. Um, so there were one or two, but for the most part, shareholders, stakeholders, partners handled it with an enormous amount of empathy. And you help them reach that empathy, right? Through frequent and transparent communication. 100% the most important things. You like when anything happens, just transparency and communication, right? Go default to that. There was, to answer your question, there was something else. There was a fight. We had a co-founder at the time who's no longer with the business, and there was he became interim CEO, and I, at the time, I think tried to defend the interests of my friend, the CEO, and that provided a pretty provided for many difficult conversations at board level, and sorry, you might have to cut this out. I'm kind of dribbling here, but
No, this
that was
is all good.
it. Created a bit of a power struggle within the company. I don't think I could have done any better. It was probably the most important thing I felt like I worked on at the time. And the board decided on a new CEO for the interim period while my friend was away. And I don't think that was the best decision for the company. Now, fortunately, when the CEO did come back, we were able to, speak to the board and revert that decision. But you can imagine that for that period, it was an incredibly destabilizing and uncertain time. And my biggest job in all of that context, right, is to shield what is happening at board level and the company and its employees and the day-to-day objectives of those people.
It sounds like the company was really lucky to have you. I know, look, from your point of view, it's like just, pouring and raining and lightning and thunder left and right. But I think the company was really lucky to have you, and also your friend and the CEO who needed to step out. He had someone that he could lean on, and I know that he's really just blessed and so thankful to God that you were in that seat. And just kind of speaking on that, I know, you guys are a Christian app, a devotional app. At that point in your career, were you closer to God? Did God help you get through that moment?
Yes. Now, I would say even more so than that. It was our users, because one of the best things about my job is that every single day, we have a little Slack channel dedicated to this. Is that every day I get to read the positive feedback of users who are using our app and who tell us about this wonderful, life-changing impact that our app is having on their lives, and how it brings them joy and how it deepens their relationship with God. And it's reading that on a daily basis that really has a sort of tangible impact on how I get through times like that in my job.
That's incredible. I want to take a pause just because we're at time, but I have another 5 to 10 minutes if you can go over.
No problem.
Really enjoying this. You good?
Yeah.
Perfect.
Sorry about about when I was talking about the CEO.
No, it's okay. We'll snip it out. You're good to just cut that little hiccup, right? The rest of it's good.
That's fine. It's just, obviously it's also just quite a personal matter, and so I'm never really sure how much to
Sure.
go. But yeah,
And
cut out that little bit.
yeah, and we'll send you the edited version to make sure you're good with it. But appreciate you being vulnerable there. That's obviously really good for our listeners. Okay. So I'm going to jump back in 1 second, and let's just talk a little bit about where you started. We can skip some of the in-depth questions. I want to ask about kind of an inflection point, how you kind of, now got on the right path, and then we can jump into maybe some AI or, good, bad, and truth about the company, maybe a little bit on your background, your childhood. Just we can go quickly through those questions, and then we'll do a quick rapid fire close.
Yeah,
If that sounds
wherever
good.
you want to take it.
Awesome. Okay, let's jump back in. So what's been the biggest transition or inflection point in your journey so far? A pivot, a deal, a launch, or a reset? How did you navigate it? I know you just told us a lot about that growth under pressure moment, so thank you for sharing that with us. Was there another big pivot after that put you guys on a different path?
Yeah, it happened pretty recently. One of our investors, our main investor, said that they weren't going to fund the company further. And so that's when it really became clear to us that we needed to make for a pretty radical shift in strategy and focus on profitability. That had a pretty big impact on the business, on the headcount, on what we were focused on a day to day. What the KPIs we were looking at would be. So that's been a massive inflection point for the business. But I am glad to say that sort of the company reacted extraordinarily well. And once we shifted the focus, it quickly became apparent that we had a brilliant foundation to build on, and when it comes to building for profitability of the company.
That's incredible. So now that you've relieved a lot of that financial pressure, you can focus on growth, the users, really just following that mission. I know that stressful period brought up a lot of tension with certain stakeholders. How do you show up for those stakeholders when they're under pressure? How can you be their rock? Do you have a go-to practice that you rely on, or what's kind of your take on that?
Yeah, I would say one thing we've done right from the very beginning, which has been brilliant, is celebrate failure as much as possible. Might be a bit cliche, but I can't stress how important that's been for everybody at the company.
Wow.
Getting on a meeting when we're looking at sort of KPIs or strategic initiatives, celebrate failure as much as possible. Because especially in life, yes, but in a company where you're making decisions on a day-to-day basis and building for the future, and you have to choose between a multitude of different strategic paths, it is so genuinely and tangibly celebrating failure is so tangible in the impact it can have, because it allows you to cross out one of those strategic paths and make a better and more informed decision on where you should go in the future. That's one thing. The other thing I would say is, with your team, show as much vulnerability as possible, especially in the sense of, if you have made a mistake, celebrate it as much as you want them to celebrate it. Be open to that mistake, be vulnerable to it, share with people that you made that mistake so they can be more comfortable with that too.
Right, because if you just hide it, they're going to see that you're kind of a fraud, or you're
Yeah,
going to lose a lot of trust in them.
if they don't see you making mistakes, they're going to be too afraid to make them themselves, or admit to mistakes, which is probably even worse.
Yeah, that human element is so important, saying that, look, I may be a leader, but I'm also a human. I make mistakes just as you would. And celebrating failures, I don't think that's cliche at all. I think that's actually really unique in the sense that, especially for small businesses and startups that lose, it's a long journey. Let's just be real.
Mm.
And a lot of times things go south.
Mm-hmm.
I know for me, we've lost clients. I can go through a million things. I was working with a fantasy sports company when all the sports shut down, and we were raising money, and
Oh, wow.
we had to let everyone go. So it's like, how how can you celebrate a failure in a really bad time?
Yeah.
But that company ultimately just sold for 4.6 billion, turned things around. So there's a success story there.
Wow.
And ultimately, if you can, yeah, to your point, if you can celebrate those failures, you can learn from them
Mm-hmm.
and limit them in the future.
Yeah, exactly. And do it right from the beginning when, those failures aren't necessarily as costly, right? Get that training in, form that culture right from the beginning. So when you do come to the real costly mistakes, you've already got that kind of pattern recognition and behavior um, totally integrated into the company and the culture.
I'm stealing that one. I'm gonna start using it tomorrow. Hopefully, there's no failures tomorrow. So I feel like every entrepreneur, executive, CEO, founder, someone in your seat, someone that has some strong traits and has been successful in their career, has something in their childhood that happened differently than someone else. And when you look back at your childhood in the early years, was there one influence, a person, a lesson, or an experience that shapes how you operate today, or that got you into this seat?
That's a great question. Um, I would say, got to mention at least one of mum and dad. But I think, uh, I think my mum really taught me how to have a lot of empathy for people. And I said I was a late bloomer. I wasn't a great student. I didn't work particularly hard. I played the class clown a lot. That was kind of my role. And I think my mum was someone who was really empathetic with me when everybody else was kind of putting me down for that. She took a totally different approach, right, to what everybody else was how everybody else was trying to coach me and bring focus into my life. And so that taught me how to manage different people and always be as empathetic as possible, and how there's sort of definitely I think an A-star player in everyone, right? You just have to sort of apply them in the right way, and coach them and support them in the right way. And I think also just my personal experience of playing the class clown for so long. I think I played it for so long that when I was finally into my sort of 20s and trying to build a career for myself, so many people still knew me for being the class clown. Sorry, one sec. I'm sorry.
It's okay. Reminds me of my house.
Yes. So, as I was saying, I played the class clown for so long that by the time I got into my 20s and I was trying to build a career, I think the people around me still knew me for being the class clown and treated me in that way. And that gave me, at one point, it all of a sudden gave me such a fire in my belly to prove those people wrong and break out of that sort of image and expectation they had of me, which was my own doing. Right? I don't blame them for having that opinion of me, right? Because I built it. But all of a sudden, I was so determined, almost desperate to reverse that and break out of that, and have people see me as a hardworking, successful, intelligent entrepreneur. And that really gave a fire in my belly kind of later on.
I'm smiling because I had a similar journey, D student, class clown, always, getting into trouble. And it does, and I don't want to take any shine away from you, because that's incredible that you use that to fuel you and get you to where you are today. So, thank you for sharing. I want to wrap up real quick on a couple rapid fire questions. Let's start with the first one. We talked about unit economics. What's one metric you check every single week without fail?
CAC, 100%. All comes
Wow.
CAC. Yeah.
Awesome.
How much money are you spending on acquiring a paid user?
Okay, perfect. And name one book, podcast. I know there, shout out to Glorify the app, or any talk you recommend most to people dealing with pressure, or even just one resource that you love.
Well, I already mentioned The Second Mountain, which is the book I referred to in my 20s when I didn't know what I was going to do after banking. So, I'm going to go for a podcast called The Totally Football Show. Nothing to do with business, right?
Yep.
But what it does do on a daily basis is help me disconnect from work, which I think is just as important, because especially in a remote working culture, personally, I struggle with, taking that stress and pressure with me outside of work. And things like The Totally Football Show really, really help me disconnect, and, shift my head onto my focus on something completely different.
And that's the real football, right? We're talking British clubs. What's your club?
Manchester United. And Manchester United are doing terribly. So I'm in need of, that podcast even more.
Yeah, absolutely. That's incredible. I completely agree with disconnecting. I have a routine. My lunch is like sacred. I even tell my wife and kids, I'm like, I love you guys, but we're not going to have lunch together. I'm going to have my lunch by myself and disconnect.
Yeah, exactly. So that podcast is, not everyone's going to enjoy it because not everyone likes football. But the point is, have those moments in your day, whether it's lunch or listening to your favorite podcast, respect them, block it out in your calendar, and, remember to disconnect.
That's great. Okay, fill in the sentence for me. A founder or leader under pressure should always
be aware of their weaknesses.
Great. A founder or leader under pressure should always be aware of their weaknesses.
Yeah. So,
Alex,
reach out.
Go ahead.
No, I was just saying, reach out for help. Don't expect to have all the answers yourself.
That's great.
Yeah.
This was great. I really enjoyed our conversation, and I wish you the best of luck and congrats on all the success. Thank you so much for joining me on the podcast today.
Thank you, Eric. Thank you very much for having me.
Thanks. Cheers.